Good morning and welcome at our weekly grain segment for a quick update of what was happening on the grain markets over the last week. Well, obviously, I think the big surprise, even for me, although we were a little bit bearish, you'll recall last week we did say that yes, that crop number came out, or that intentions to plant number came out. Could be fairly negative. The rain was falling fairly well, except with a little bit of a problem in the northwest province, where rain is very scattered at this point in time. But yet, the big surprise for me was on the March contract. Although we were a little bit bearish, not to the amount that we actually saw the March contract come down. Now that contract, in other words, the old crop season, the current spot prices, or then the current prices for maize, that market performed very poorly towards the downside. We actually saw the market coming for consecutive 3 days in a row, almost limit down. We saw that market turning somewhere around about the 2,250 Rand a ton levels, and then the market recovered a little bit to the current level. So that March contract really took a very big hit last week. Of course, we also saw something in the new crop. That is then the July contract. So that is the maize that's currently in the ground, the new crop that's going to be harvested later this year, June, July, August, round about there. That contract also came under pressure. First of all, what is important, we are still below the 2,000 Rand a ton. We spoke about that last week, and that is quite significant to me from a technical analysis point of view. That 2,000 Rand a ton at the moment is very definitely now a new resistance level. So for now, we are trading below the 2,000 Rand a ton on that July contract, and even a little bit towards the low side or towards the softer side to the downside. I do believe that in the very short term, we're probably going to see a break below the 1,900 Rand a ton potentially as well. Now, if we have a quick look at what happened in Chicago, this week we had the USDA situation and their crop numbers that came out, and that was also a little bit bearish as far as the maize market is concerned. I actually thought that the wheat market was quite bullish as far as those numbers were concerned, but the market took that also negative, and we saw that Chicago came down on those numbers. Now that downward movement on Chicago is also going to spill over into our market at the moment. So we've got a little bit of a softer situation as far as the international commodity prices is concerned. There is some concern from the USDA point of view, as well as from what's happening in the financial market. We've got some problems from Greece again. Greece again is missing their deadlines, their payment deadlines. That's also going to spill over into the financial markets. So I'm really a little bit nervous as far as the maize prices is concerned. The good news, however, though, for producers out there, the current prices are still very, very good prices. This is a very good level for farmers to start pricing on. I would definitely be talking to my marketer to see what can one do at these levels in terms of minimum prices. But forward selling at this point in time of the crop, I think should definitely be at the order of the day. And that's it from us until next week. Do enjoy your farm.